Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. My name is Aaron Edwards with Santos Springs. Today is August 5th, 2025. New lows on corn. The corn market has been no fun. Beans have also really been weighty. Maybe they're turning a corner. We'll look at the markets in just a minute. But first, as always, we want to start with call to action, that bias towards action. Let me go ahead and share the screen and go from there. So we're just wrapping up our quarter three sales. We wrapped up a week or two ago on corn, and let me check the box here. We're going to exit the hedge and sell cash soybeans on 30% of the quarter three volume. Basically, that's going to wrap up our soybean 24-25 season. We still have some basis contracts on corn, both on new crop as well as some quarter three bushels. But we are, it's almost harvest. It's time to be wrapping it up, and we are wrapping that up. That's the only recommendation, is just on the beans today. And let's look at markets. Before we jump into the markets, I wanted to just get a quick update on where we are from a crop standpoint. What's on the screen there is the soybean conditions as of August 3rd. Grab a marker. Actually, I think we'll use a highlighter and we'll make it yellow. Let's keep it green. Green for beans. Okay. So basically, when they compare good to excellent, that's what they're looking at. So it would you would add up the good and excellent ratings and then compare it to last year and also last week. In a nutshell, 69% of the soybeans in the U.S. are classified as good or excellent, compared to 58% last year. So 1 percentage point better than last year, 1 percentage point worse than last week. We're going to do this, well, while we're still on soybeans, 85% of the beans, according to Monday's USA report, are blooming, compared to the historic average, 5-year average of 2020 through 2024 of 86%. And then 58% are setting pods. Now let's shift gears to corn. We'll talk a little bit about the phases of development of corn, but first, let's just talk about let's just look over the conditions. We'll make this one yellow. There we go. So corn, the top 18 states that produce the most corn, 73% of the corn this year is classified as either good or excellent. Last year it was 51 plus 16. That's 67%. And last week it was the same, unchanged from last week, but 6 percentage points better than last year. And from a developmental standpoint,
This year, 88% of the corn is silking compared to the historic average of 89%, so 1% behind developmentally on that. 42% this year of the corn is in the dill phase. That's 2 percentage points ahead of the historic average of 40%, and 6% is dented, which is right aligned with the historic average. In a nutshell, crops look very, very good, either at or better than historic averages for the most part. And it's tough to get a rally when that's what the fields look like, especially on corn. We have big acreage. So we always want to have kind of this pyramid where we do the market plan, then the seasonal and the funds and the call to action. That's the philosophy of work. And let's start by talking about markets. Let's start with the soybean market. And I'm going to grab a marker, get a marker and make it blue. That'll work. Bad news on the beans is that speculators sold, and they sold quite a bit last week. So if we want to go back to 3 weeks ago, they went net short. Then last week, 2 weeks ago, let's do that again. 3 weeks ago, they went net short. 2 weeks ago, they went net long. Last week, they went net short. And they're kind of going back and forth. It is a pretty big short position. The last time we had a short position in line with this was back in April. So not so much bullishness with the beans. I think the getting rains and rains forecasted for the rest of the growing season is friendly. There are a couple things I want to point out on the soybean chart, and that's primarily technically, but just in general, we're going to keep that blue. So this line that does not move that much. This is the 200-day moving average. It's the average price of the last 200 trading sessions. This line that is more responsive that I'm drawing on, that is the 20-day moving average. And I'm not tracing that perfectly, so that's just for language. But the 20-day moving average they're both coming down, but the 20-day moving average is coming down a little bit more aggressively. Then here you have the 200-day moving average. We may have gotten a key reversal here. It looks like a key reversal. That was Monday's session. And then overnight trade, getting some green, which is friendly. Maybe this market is done selling off. But now we have a lot of resistance on top of us. So we have the first level of resistance is the 20-day moving average. If we can get up over that, then we have the 200-day moving average. And maybe we can get up over that, but you just have to think of the selling pressure. For me, when we think about soybeans, at this point in time, how much selling pressure do we have on top of this market? I would be surprised in the soybean market if we get a runaway rally. I think that resistance levels will be met with selling pressure, whether that's the 20-day or the 200-day. And I'm just a little weary that I would be surprised if we get just an absolutely strong, mind-blowing soybean rally because of selling pressure that I expect is over this market. The good news, in my opinion, is that if you look, I had said this in the past, but if you look at the $10 mark, this is new crop beans, right? You look at the $10 mark, and we really don't get very comfortable under $10. We don't spend much time there. And if I go back, I believe there's a time in November as well, or there was another time that we went back under $10 and it kind of bounced up pretty quick. If it is the case that beans under $10 are cheap soybeans, that's something we can, to some extent, hang our hat on, because we'll know that buyers will come in and scoop it up. So if beans are too much under $10, then we can celebrate. We can be excited. We can be excited for that. I did also want to show on the soybeans, I wanted to show basis levels, because basis is very strong, but it's not, get a red marker, basis is very strong, And it might strengthen a little bit more historically speaking, but we know that at some point in time, seasonally, it does this at harvest. Typically, that's a September move, and it really crumbles in September. But we're wrapping up our work here sooner just because we're not going to push. When that basis level switches from old crop to new crop, it's kind of a game of chicken, right? The longer you can hold on to that cash, the stronger that basis gets until, boom, it evaporates and it's gone. So it's kind of playing a game of chicken. Typically, you want to be emptying your corn a little faster than you empty your beans, because sometimes we get that last little push on the cash market on the basis for soybeans. We're a little more hard pressed to get that last push on corn. But just show you, we do have strong basis. So the narrative that, oh, demand is weak for beans or there's not buy, I mean, they're paying basis levels that are strong for soybeans align with historic averages. The problem is, if you have corn under $10, you need a really good basis to come up with a decent price, and that's not really what we're having. So shift gears now. We want to talk about corn. Let me get a marker pulled up here on the corn as well. Let's go with green. There we go. So the spec funds, we got that February rally, real big overbought position. Last harvest, we had a really big sold position. Here we are sold a net short position, and it is a big enough net short position to justify, that they are oversold. Spec funds in Chicago are oversold. That being said, they haven't really increased the maximum point here. We go back to basically the 1st of July is where they kind of maxed out that net short position. And for the most part, they've been backtracking on that. Slight increase over last week, but it's still they're kind of paring back. They're stepping back from that sold position, which is a little bit encouraging, or it would be encouraging if it weren't for what's going on in the corn market. This is just the nearby month. So it's just the corn futures position, like you're nearby, right? We're not looking at any specific contract. And what I wanted to point out from this chart is that we are almost at these price levels. We are almost back down to the harvest lows from last year. The harvest lows came down to 380 last year. And obviously cash prices were under that. We're only 15 cents above that. I mean, that's one bad trading session, and we're right back there. Honestly, at this point in time, it would not surprise me if we don't go back and test those levels. If we could avoid testing them, that would be nice, but I'm not convinced we won't lose that other 15 cents still and get there. Let's look at new crop corn, which is honestly where most of the attention is. Maybe there's a little attention in September, but most of the attention is in new crop corn. I'm going to do red just because this is so bleak. Overnight trade, new lows again, 405. So just for clarity on that other one, the nearby right now is September, right? And that's pressured below the December. But this is new lows for this contract. And if you look really since the beginning of the year, we've just been down, with very few exceptions. It's been a very, very rough year for corn in general and new crop corn in particular. How low can it go? I'm not convinced corn is done falling. It seems like soybeans turned a corner and maybe corn is done falling, but what are the chances that we get a rally? So whenever I'm thinking, should we buy corn? Should we go long? There's two things. Is it done going down? And number two, is it actually going to go up? Because if I'm not sure it's done going down, but I'm pretty sure it's not going to rally short term, if it's just going to drift sideways, we don't need to be in a hurry to buy this, right? If it looks like a V recovery, oh my, this thing's coming down. We're not trying to get the absolute low tick. We're just saying, listen, It's been falling. I'm not convinced it's stopped falling. And even if it were to stop falling, it might be more sideways for a minute, then it goes up. Let's just wait. So no action recommended on corn as much as possible. Try to not multiply whatever your current cash corn bid is by your net worth of your farm or your P&L, or that's a quick path towards a very disheartening Tuesday or Wednesday or whenever you watch this. Markets go up, markets go down. Corn is oversold. I'm not sure we're going to get friendly news for a while on corn. There's just a lot of corn out there. There's a lot of selling pressure on top of this market. But markets do turn. Less than a year ago, we had corn up around 480. And can we not rally up to 460 or 480 again? Yeah, we absolutely can. We just need to be patient. And then we also need to be ready to pull the trigger if and when we get those opportunities. So as much as possible, try to not let the bad price of corn ruin your week, ruin your day. Corn is a little different, like I said, than the soybeans, and it's already kind of turned a corner, and it's probably already on its way down to whatever that harvest low level is. This basis in particular is from Tippecanoe County, home of Purdue. That's who puts out this tool, and this is the corn basis. But the basis trends are pretty uniform across the Corn Belt. And at some point in time, maybe it already happened, maybe it will happen, we'll basically get a switch from old crop to new crop, and that basis will give way pretty quickly. And I expect that it's probably started to happen on corn. Over the next couple weeks, it'll probably be, I'm guessing we're going to be pretty close to just having new crop basis. We might have a few more weeks on beans, but then it'll switch over pretty quick as well. Wish I had better news, but it is what it is. And now let's go to just kind of that summary. Let's just look at a summary. So corn, let me type this in here. Corn is seasonally, it's neither a buy nor a sell. Same thing for soybeans. They're neither a buy nor a sell. The managed money, the speculators in the corn market, they are oversold, which means that is a buy indicator. And the managed money for the beans, they are sold. But it's neutral because they're not oversold. They're not overbought. They're just going, last 2 weeks ago, they were a little bit long. Now they're a little bit short, and they're just going back and forth. The trend on corn is down. The trend on beans is down. And this is not a happy trade in the market. Let me get this audio recording here. Corn basis appears to be switching from old crop to new crop in many parts of the country. I expect basis will evaporate pretty quickly moving forward in the corn market, if it already hasn't in your region. Soybean basis levels are at the highest point they have been all year. Historically speaking, we may have a week or two left of very high soybean basis levels, but soon soybeans will go the same way as corn and switch to new crop basis, which tends to be much lower. The soybean market may have turned a corner on Monday's trade, at least short term, comma, but I still don't expect a significant rally given the selling pressure that is likely awaiting soybeans if they get a bounce. The corn market put in new lows in the December contract. I am not convinced corn is done falling, comma, but even if it is, I think a short-term rally is unlikely. It would be nice to get a friendly August report, but even if we do, a rally will likely be met with selling pressure. One thing that I wanted to make clear, just point out, there's some people who basically see the world through a more bullish lens. Corn always could go higher. And there's some people who basically see the world through a more bearish lens. Well, we're always going to raise more corn and prices are going to be pressured. I think that always being one or always being the other, having tendency to be one or the other, can be challenging. And it's very hard to shift gears between being bullish and being bearish and, going back and forth. So I just wanted to make something very clear. I do believe that there is upside potential in the corn market. The spec funds are oversold. These numbers on most farms do not work. Before too long, we might have low enough prices to where some people are starting to look at their insurance check and be like, man, what? Do I even need to sell now? Am I going to get a check? So if it keeps going down, how low can it go? That's one factor. That being said, shorter term, if it rallies, there's some old crop out there. There's unpriced new crop. There's corn that's going to have to trade hands at harvest. So I personally think it's going to be very hard to get any type of sustained rally until we can lift the weight off of that selling pressure that is somewhat inevitable, right? That doesn't mean that on the backside of harvest, get a little, October rally or a little Santa Claus rally. That doesn't mean prices can't go up, and it doesn't even mean they can't go up a lot. Speculators, when they flip from long to short, we could see big moves. We did last fall, and especially into the summer, January or into the winter, January, February. But they started picking that up a little bit already in the fall. So it's not that I'm necessarily bearish or bullish, but what are the chances we get a runaway rally if there's just a ton of selling pressure on top of this market? Not very great. What are the chances we get a rally if and when that selling pressure somewhat lifts? Pretty decent. So it's not necessarily a bullish or a bearish sentiment. It's just, will it rally? How soon will it rally? Why will it rally? How high can it go? And number one, I'm not convinced corn's done going down, as painful as it is to say. I think we might test those lows from last harvest, might challenge them. That's something to watch. It's about 15 cents lower on the September contract. But number two, even if it is done going down, which would be great, which would be wonderful, is it going to rally or is it just going to chop sideways for a few weeks? And I think we're probably in somewhat of that boring limbo where I'll be surprised if markets rally too much. USDA report can change that. Headline can change that. Trade wars, weather, there's plenty of factors that can change the world. But what we see today, those are my thoughts. So hope you have a great rest of your day, great rest of your week. And let me know if you have any questions.